You know, investment research, it used to be all about friction.
Oh, yeah. Days, sometimes weeks, buried in SEC filings.
Exactly. Trying to find that edge meant manually cross-referencing data, wrestling with just, well, information overload.
Hmm.
Now it feels like we're seeing institution quality analysis, deep, contextual, auditable almost instantly.
And ChatGPT-5 seems to be at the heart of this shift.
It really does. This feels, well, profound because it's maybe the first AI model that feels reliable enough, trustworthy enough for serious, real money financial decisions. Welcome to the deep dive.
Great to be digging into this.
Today, we're going to try and peel back the layers on how professional investors are adapting. What are they actually doing with this?
Yeah, the practical application.
Our mission is to explore the structured methods they're using. We'll look at how AI tackles, traditional fundamental analysis, the stock picking side.
And then the technical side, too.
Yeah.
Chart patterns and timing.
Exactly. And crucially, we want to uncover the prompts, the master prompts they use, and maybe most importantly, the human checks. The verification steps needed to keep this powerful tool, well, safe.
Absolutely essential. What's really striking, I think, is how this seems to address the old trust problem.
The hallucination issue.
Right. For ages, AI was basically unusable for serious finance because of it. Models would just invent numbers.
Make things up.
Yeah, invent figures, create fake trends, make statements with zero factual basis.
Yeah.
It turned analysis into something dangerous, like fiction.
That risk. I mean, the AI just inventing a crucial number, that's the ultimate deal breaker in finance, isn't it?
Completely.
So what makes CGPT-5 the breakthrough here? Is it just smarter or is it something else?
I think it's less about raw intelligence and more about being verifiable, auditable.
Okay.
It really comes down to auditability.
Right.
We're seeing a huge drop in those hallucination rates. But the big thing, proper source citing.
Kind of like footnotes.
It's exactly like footnotes, like an academic paper. It shows you precisely which SEC filing, which press release, which 10K generated that specific data point.
Okay, that makes sense. It's building trust through transparency.
Yeah.
So here's a question then. If the AI is getting so much more accurate and it's citing its sources perfectly, what's the main competitive edge for it compared to, say, a really skilled human analyst doing the same deep dive manually?
Yeah, that's the core question.
What's the edge?
I'd say the edge is the scale of contextual awareness analyzed instantly. Speed and breadth beat manual review every time when you're talking hundreds of documents.
Right. Scale.
Yeah.
And that scale brings us neatly into fundamental analysis.
The classic approach.
Trying to figure out a company's real intrinsic value, looking at its financials, its market position, the management team.
All that good stuff.
And the AI here, it's not replacing the analyst, is it? It's more like a super-powered research engine.
Precisely. The key is effective delegation. You, the investor, you set the strategy, the framework. The AI does the heavy lifting, the relentless data sifting.
So you use something called a master prompt framework.
That's right. It starts broad. You define your investment strategy first. Are you looking for growth, value, focused on a specific sector like tech or healthcare?
You set the direction.
Exactly. But then you get specific. Once the strategy's set, what's like the most critical hard number you ask the AI to screen for first? Is it always about cash flow?
Positive free cash flow growth is usually a pretty strong sign, yeah. Shows the business is actually generating cash, it's sustainable.
Makes sense.
But you need safety nets too, right? So the quantitative screening part needs hard metrics. Things like a liquidity ratio, maybe above 1.0, high gross margins, say north of 40%.
Right, you're building criteria.
Yeah, it's like stacking Lego blocks of data, building a solid foundation.
And then there's a third step, which handles the, let's say, squishier stuff.
Yeah.
The qualitative screening.
Management track records. Market sentiment.
Yep. Leadership quality, competitive moats. Does the company have a real advantage? What's the buzz, the analyst consensus? Is management stable?
Let's make this concrete. The source material used NVIDIA as an example. How does the AI output look?
Well, when structured correctly, it doesn't just dump numbers on you. It synthesizes.
Okay.
So for NVIDIA, it might highlight, say, the massive revenue growth and data centers up, what was it, 427% year over year? And the high margins.
But it goes beyond just the numbers.
Critically, yes. It translates that data into competitive intelligence. It points out how NVIDIA's CUD ecosystem creates huge switching costs for customers. That's a qualitative insight derived from the data.
Got it. But the key quality check is?
Traceability. Always. Every key number, every claim needs that footnote back to the official source, the specific 10Q or 10K filing. No exceptions.
That makes sense. You mentioned prompts. I still wrestle with prompt drift myself sometimes. Getting the AI to consistently apply the exact same criteria over time.
Oh, absolutely. It's a real challenge.
And beyond just consistency, we also need the AI to consider context, right? Like, how does a recommendation fit with my existing portfolio? Or the current economic cycle? Rising rates, falling rates, that changes
It's
things.
hugely important.
What does that prompt drift actually look like? Does the AI just get lazy, or does it subtly change the rules on you?
It's kind of more insidious than laziness. It's like the AI subtly shifts the emphasis of your criteria based on past chats. Or it might just forget a key negative screen you set up.
Yeah.
So if you ask it for value stocks 3 days running, maybe on day 4, it slightly relaxes your required liquidity ratio unless you explicitly state it again every single time.
Constant vigilance required. Okay, so thinking about fundamental analysis, if the AI is doing all this screening, analyzing financials, qualitative factors, what's one big challenge where human oversight is still absolutely critical?
Defining the right criteria up front and, crucially, aligning those recommendations with the broader economics cycle context. The AI gives you data, you provide the wisdom.
All right, so the AI has helped us find potential value through fundamentals. The next big question is when. When to potentially buy or sell, and maybe more importantly, how to manage the risk involved.
Timing and risk management.
And that speed and data processing power.
Mm.
It leads us right into part 2. Using AI for technical analysis.
This is where it gets really interesting for traders. Technical analysis aims to predict price moves by studying past chart patterns, price and volume action.
Right.
And the AI becomes this expert chartist, spotting complex patterns across hundreds, maybe thousands of assets way faster than any human possibly could.
And the technical master prompt for this, it's demanding. It needs 2 types of data.
It does. That's a key innovation, I think. You have to give it the screenshot of the candlestick chart. That's for the pattern recognition part.
Okay, the picture.
But then you also feed it the raw numbers, the CSV file with the OHLCV data.
Sorry, can you just quickly define OHLCV again for everyone?
Sure thing. It's open, high, low, close prices, and volume for each period. It's the mathematical backbone.
So the picture and the numbers.
Exactly. The numbers validate what the AI thinks it sees in the picture. Ensures precision.
So that dual input, it creates like an immediate internal check, a verification system built right in.
Precisely. The visual pattern gets confirmed or denied by the hard mathematical data.
That must cut down errors significantly, and it gives you exact measurements for setting stops, targets,
Clever.
risk management.
Spot on.
Wow, that combination, speed and precision, it really changes the game for a trader, doesn't it?
Whoa.
Imagine scaling that. Analyzing, I don't know, 1 billion potential trading setups every single day.
The scale is mind-boggling. And that precision shows up in the examples. Like the head and shoulders pattern discussed for NVIDIA, that's a classic bearish reversal setup.
Okay.
The AI doesn't just flag it and say H&S pattern here. It explains why it sets the criteria, the specific price structure, the volume action that confirms it.
And then it gives you the actionable levels.
Exactly. Precise levels. Here's your potential entry point. Here's the stop loss, the price where the pattern is clearly invalidated. And here are the profit targets, often based on a measured move calculation.
So it hands you a structured trade idea, potentially with a favorable risk-reward ratio, maybe like 1 to 2.2, ready to go.
That's the goal. And you can get more advanced, too. Things like multi-time frame analysis.
Checking if a pattern on, say, an hourly chart aligns with the trend on the daily chart.
Exactly that. Adds conviction. And you can integrate it with option strategies identifying key strike prices near the AI's levels, estimating timelines for choosing expirations.
Okay, so we've got the analysis, maybe even a specific trade idea from the AI. What are the crucial implementation steps? How do you actually make this research effective day to day?
You absolutely need a structured daily routine and just relentless quality control of whatever the AI gives you. It's not magic.
Mid-roll sponsor read placeholder.
Yeah, so that structured routine,
Yeah.
it's totally non-negotiable. You can't just casually chat with it and expect consistent results.
Yeah.
You need a daily analysis routine.
Like a checklist.
Sort of. Morning prep could involve checking overnight futures, seeing what economic data is coming out that day, analyzing pre-market gaps in your watch list stocks.
Okay.
Then, at the end of the day, an evening review, a performance post-mortem, what worked, what didn't, and then updating your watch list using fresh AI screenings based on today's action.
Discipline is key.
Absolutely.
Uh-huh.
And quality control, the QC part,
Yeah.
this is where the human judge comes roaring back. It's critical. AI is a tool, an incredibly powerful one, but it's not a replacement for your own thinking.
So always check the sources it provides.
Always check the footnoted sources.
Mm.
Always try to cross-reference key data points independently if you can, and just use basic sanity checks. Meaning, if the AI suggests a tiny biotech stock should suddenly jump 500% based on some obscure regulatory filing it found, you probably want to verify that filing wasn't just, I don't know, a draft or misinterpreted. Does it make sense in the real world? That systematic skepticism, it saves you from potentially huge errors. And one really powerful technique for complex decisions is using chain-of-thought analysis prompts.
Asking the AI to show its work.
Basically, yeah. You ask it to walk through its reasoning step by step. First, check the fundamentals. Then confirm with technicals. Then assess the risk. Then, and only then, give the final verdict or recommendation.
So you can follow its logic.
Exactly. It makes the reasoning auditable, not just a black box answer.
But that complexity, all that data, doesn't it risk leading to, analysis paralysis? Too much information, can't pull the trigger.
That's a very real risk. Information overload is easy with these tools.
So how do you fight that?
We use strict filters in the prompts. You explicitly tell the AI, summarize your findings in exactly 3 bullet points.
2 bullets only.
Yep, maybe. The single strongest bullish factor, the biggest risk or concern, and a clear, concise action recommendation. Constraints force clarity. Cut through the noise.
That's smart. And what about the risk of just believing the AI too much? It sounds so confident sometimes.
Well,
Overconfident.
Huge pitfall. To counter that, you use skepticism prompts.
Asking it to argue against itself.
Pretty much. You force the AI to play devil's advocate. Ask it, what assumptions did you make here that might be wrong? Or, why might sophisticated investors be selling this stock right now, even if it looks good on paper?
Challenging its own conclusions.
Building that critical challenge into the process, not just as an afterthought. That's how you aim for a sustainable edge, I think.
Okay, so let's try and wrap this up, synthesize the big idea here. ChatGPT-5 seems like a genuine leap forward. It's making institutional-grade research much more accessible.
Definitely feels that way.
But it's not about just handing the keys over to the machine. It's more like a structured collaboration.
Yeah, a partnership.
Between human intuition, which sets the strategy, asks the right questions, and this advanced AI, which handles the massive scale of data processing and synthesis.
That's a great way to put it. And the crucial takeaway, I think, no matter how smart this tech gets,
Yes.
is that you, the investor, you must still verify the critical data points. You have to understand your own personal risk tolerance. You have to manage your position sizing appropriately.
The AI provides guidance, but the responsibility is still yours.
Absolutely. The AI is your assistant, a powerful one,
Right.
but it's never your master. You own the risk.
Always.
So, here's maybe a final thought to leave you with. If the AI can flawlessly analyze financials in seconds, if it can spot complex chart patterns instantly, calculate precise risk-reward ratios, all using auditable sources, what percentage of your investment decision process should still remain purely intuitive?
That's a deep question. It's something worth exploring, I think, as you design your own systematic, risk-managed approach in this new era. Where does human gut feel fit in now? We definitely encourage you to start thinking about structuring your own daily blueprint, maybe focusing first on those critical quality control and verification steps we talked about.
Start small, build the process.
Exactly. We'll see you next time for the next deep dive.